Hi, this is Adrienne Marks coming to you from beautiful San Clemente with a real estate market update. We have a lot of information to cover today, so let's get right to it. First off, existing home sales. I want you to understand that existing home sales are way up over last year. At the yellow dotted line across the graph is where they were last year in February, and that red double arrow on the right-hand side shows the increase over last February. So though you will see some headlines saying that sales are down compared to a few months ago, which is true, they're still way above where they were this time last February. So what we're looking at is that there's a seasonality. Definitely as we go into the winter, there's less sales, but in comparison to last year, we're still way ahead. And if we look at pending home sales, the number of sales that actually went into contract, they're surging right now. The gray dotted line across the screen is what NAR sees as, and of course this is an index, not the number of sales. It's an index that NAR uses, that a normal market is 100. Anything over 100 means we're very, very healthy. And as you can see, over the last couple months, we're surging over that 100 mark, where this time last year, we're actually not a healthy market. This early winter, we are very much a healthy market. And that's all the way across the country. Whether in the Northeast, the Southwest, the Midwest, or the West, we have increased sales. Obviously, where the weather was worse in the Northeast, you had the lowest year-over-year increase in pending home sales, the number of houses going into contract, but in every one of those markets, it's very healthy. And if we take a look at new single-family homes, we can see the new home sales reached 500,000 or more for 2 straight months for the first time since early 2008. Sales are almost 25% higher compared to a year ago. So if we look at existing home sales, new home sales, pending home sales, all the way across the board, the numbers are way up. And if we take a look at foot traffic, the number of people that are going out and looking at houses, remember NAR keeps those numbers, how many people are actually out looking at a house? We can see that those numbers are double what they were last February. They weren't as high as they were the last couple of months, but they're double what they were last February, meaning that buyer activity is almost 2 times greater than the same time last year. And that's going to lead to more pending home sales, more new home sales, and those pending home sales, people going into contract, will start to increase the existing home sales report. So I think we're in a really, really good place, ladies and gentlemen. As a matter of fact, the recent study done by Pulse Economics says that 5.2 million renters plan to buy in the next 12 months. That's 5.2 million renters that plan to go ahead and purchase a home in the next year. Now we know that not all 5.2 million will. That's what their plans are, and things get in the way of plans. But what we're seeing is that there are people looking to move out of the rental market because rents are skyrocketing and into the purchase market. And what does that lead Freddie Mac to believe? This is their quote: "We're feeling good about housing. In fact, we expect the best year for home sales and new home construction since 2007. They're looking at the best year in the last 8 years. That's pretty incredible. And if we don't have inventory, we're going to have a problem. If we take a look at how much inventory we had this year compared to the same month last year, we've had 3 months in a row where inventory is less. Inventory levels are less than they were just a year ago. Anyone that's a buyer right now or thinking about purchasing this year should do it right now. Interest rates are scheduled to go up. Prices are definitely going to go up. So just on the supply and demand part of it, it makes sense. Everyone from NAR to CNBC is saying the same thing. There's not enough inventory out there. Now I know in certain markets in the US, it's not as acute as others, and I also understand, like in some price points in Denver, they could be down to not months of inventory, but weeks of inventory. Here in Orange County, we're at 4 months of inventory, but there's no place in the country across the board that there's not a challenge for inventory. Sellers should know that May, June, July, and August, those are the primary months to get a house sold. That's when most houses sell. Then it falls off after that. Don't miss this buying section between now and August. Sellers have to get their house on the market now to avoid going into a less favorable market as far as the number of buyers out there. Here's a chart that's very helpful. What is the impact of pricing on visibility? This was a report that was done by Move Sales Inc. that was publicized by NAR. And what we can see is that if sellers listed at the market value, they're going to get about 60% of all the people that are looking at houses are going to see their house. But if they do it 10% below market value, that number jumps to 75%. And if they do it at 15% below, they're going to get 90% of all the people looking for a house in that marketplace to actually go see theirs. But let's take a look at it the other way. If sellers make the price more than what market value is, or more than what the house that was just like theirs around the corner that just sold, they're cutting down on the number of potential buyers who will look at their property. On the left is the pricing, and in the middle of the triangle is the amount of the public that are currently looking into houses like theirs. What percentage of those people will see their house? Well, sellers can either help or hinder the sale of their property based on price. This time of year, people like to buy. Homeownership is really what's driving the market right now, the desire for homeownership. In a Merrill Lynch survey, in every single generation, more than 8 out of 10 believe that owning a home is an important part of the American dream. Even in the millennial generation, which some would want to lead us to believe don't believe in homeownership anymore, still 81%, 8 out of 10 of the millennial generation see home ownership as an important part of the American dream. That's why we're seeing the surge in buyers right now. They don't want to get priced out of a home ownership, especially with rents continuing to increase. And they understand that owning a home helps you build your family wealth. Now, if we take a look at interest rates and we bring them all the way back to 2013, so we have over 2 years there, you can see that the interest rates were very, very low. They skyrocketed and came tumbling down. Most experts predict that interest rates will go back up. If we take a look at the historic mortgage rates by decade, we can see that where we are now, still under 4%, is an anomaly. In 3 of the last 4 decades, that number was more than double the 4%. And even in the 2000s, that number was, over 2% higher of where it is now, 2.5% higher than where it is now. So most experts project that interest rates are going to go up. Freddie Mac took a look at what the annual interest rate was from 2011 all the way to 2014. They looked at 2015 and said, all right, well, we started out low, so we're going to be a little bit lower than last year. But look at what they're projecting for 2016, that the numbers are going to jump up higher than they've been in 6 years. When is the best time to buy a house from an interest rate standpoint? Right now. And if we take a look at what Fannie Mae, Freddie Mac, the Mortgage Bankers Association, and NAR are saying about where interest rates will be over the next 4 quarters, we can see that all of them are projecting that they're going to be higher than they are now. What we did is we averaged each one of their projections out, and all the way on the right-hand side is an average of all 4 projections. So by the same time next year, if we take a look across the board, we're going to be at a number which is greater than 1 full percentage point ahead of where it is now. To make that a little bit more visual for you, the blue in this graph shows you where the interest rates have been since the beginning of the year. And this is where they're projected to go over the next 12 months. When's the time to buy? The time to buy is now. You might say, well, Adrienne, can we get a mortgage? Yes, mortgage credit availability is also increasing, ladies and gentlemen. With new programs available like 3% down payments, with the banks being a little bit freer with their money, we can see that happening. More and more people are buying, but at the same time, inventory is going down. We had a real serious challenge 2 years ago, but then over the 18 months that followed that, we were in good shape. We were really building inventory, and now sales are up and inventory is going down again over the last 3 months. We need 6 months inventory for the market to remain healthy, and we're down below 5 now as a nation and hovering around 4 months in Orange County. Let's jump to the Case-Shiller report. What we're seeing is that because inventory is down and sales are up, prices are starting to make that turn again. Now again, that's good news in regards to building more equity and all that. The bad news is that it's going to start pricing people out of the market. The next slide is a little easier to see this in. We had a continual drop all the way through 2014 up to November, meaning that the market was starting to balance out. There wasn't that dramatic price increase. Normal historic price increases will be about 3.5%. And we were going down to that 3.5% mark, where again, the market would be very normal. A buyer could buy or a seller could sell. But now what we're seeing in the last 2 months, prices are starting to head in the other direction. It's about the supply and demand. Now, existing home sales, though they're showing some seasonality, they didn't crater like they did last year. Pending home sales, same situation. Not only did they not crater like they did last year, they're actually surging this time of year. And a really good number is the percentage of distressed properties is falling compared to where it was the same month last year, from 15% down to 11%. In Orange County, just over 3% of the 7,600 homes currently for sale are distressed sales. That's well below the national average. We believe that knowledge is power. In an effort to help the many individuals out there who are thinking of selling or buying a home in the near future, we have some important information to share with you so that you can feel confident about making informed decisions concerning the most valuable asset you're likely to own, your own home. You can get a free report for sellers or buyers simply by clicking on the corresponding links. All you have to do is plug in your name and email address, and you will receive a report via email in a matter of minutes. Thank you for listening, and check back next month for the latest real estate news.